The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Appreciate you growling and prowling out here. So right now we have the Dow down 45, Nasdaq's up 6, S&P's are, let's see, down 2.5. Gold's up 440. We get the silver up a penny. Bonds flat out here. King dollar. King dollar is the number right now. Let's go over and look at King dollar first, because it's going to be intriguing, because King dollar is struggling, folks. If we take a look at King dollar right now, that little baby is down 517 ticks. We're trading 97.21. The correlation goes like this. What King dollar had done. Let's put this on a daily for a second. See how we're setting up. Okay, so what King dollar had done is this. On Monday and Tuesday, it tried to get the higher price. This was, by the way, was only going into a minor swing high. It was going into the last bounce that we had in May. Couldn't handle it. Now, what you did, and this is the clue, we came off that swing high, the swing high that was established out here that was trying to get into on on July 20th, which was Monday rather. Then it came off that high and you had an expansion of volume. Now the real key is, are we gonna get into this area of the 97.45? That's crucial to say. Okay, are we getting into that or not? Bottom line is that I expect that we're not only going to get into it. I expect what you're going to see is that more than likely what's going to happen is that we're going to break down. You know, that's how this baby seems to be set up right now. So what I do expect. Whoa, just give me 1 second. There we go. Sorry, folks. Something's wrong. What is going on? There we go. Sorry. What I do expect we're going to see here is that you are going to be breaking down and getting into these lower prices. What's going to be so intriguing about it is that it is absolutely counterintuitive as to the aspect of, you know, what the heck, why would the dollar go lower, the euro go higher, when we know that the European deal is, you know, basically toast. But bottom line, that's how this baby is setting up. If we go over and we take a look at, first off, hey, listen, Vince, I heard you call Larry. That's a beautiful thing. We are so happy that you're doing good, getting better. That was so cool, man. I'm telling you. It was great to hear your voice out there, Vince. Big time. And you sounded great. And call all the time. They're hour shows, but man, they're long shows. There's no doubt about that, man. So give us a call, man. That was just great hearing that great voice of yours, man. Market-wise. Okay, so what do we have out here market-wise? Well, what we're looking at is this. Yesterday, let's go with the NQs first. So if we take a look at the NQs, this is what you have happening. NQU5. The NQs, we came down and we got to a price point intraday of 4588. You come down with some juice. You can expect that we're going to have to build some cars now. I don't think this is going to be you can see that it's going to be not a huge day out here. What we are going to have, I expect, though, is that you're going to get, we're going to set up some kind of a consolidation. The consolidation in the Qs probably go anywhere from 632, down to this, we've already hit the low of 09. Now, that's decent if you're trading in the futures or you're trading in the Nadex product. Bottom line, what we still have is that at 4596, that low that was established on the 22nd, bottom line, that's a high volume swing low. So that high volume swing low is saying, guess what? We will get back into that area, and we're going to see that lower price. So that is going to be just wild watching that whole thing shake out. The silver market. Let's go take a look at silver, because what we did have with silver is this. Silver had tested the swing high, the swing low rather, of July 7th. It did it with lighter volume. It hasn't been able to get any traction yet. I suspect silver is going to be the first place that we do get traction. The reason I'm saying that is that when we tested that area, we tested it with 59,000 contracts versus 95. Now, bottom line, it's going to, are there any buyers? That's what it really comes down to. You know, when we do take a look at, you know, I heard Larry also talking about ABX. There's no doubt, man. You know, a couple of these gold stocks, man, Barrick. The thing that's wild, it's the large gold stocks that look really bad. You know, so you know, we'll see if they come in with a sign of strength, and if they do get some kind of strength. In Europe right now, the European markets are flat. You get the FTSE down 0.2%. The DAX is off 0.2. The DAX is off 0.4. Overnight in China, you had the Hang Seng up 0.4%. Shanghai was up 2.5%. And of course, in Shanghai, though, what you still continue to have, and this is going to be wild watching this whole counter trend bounce take place, because ICE. So we're at 41.23. ICE is set up in Shanghai at about 44.76. So that's a good amount up on the way up. And what you do have, of course, is that I'd like to know how they're getting the actual numbers inside the Shanghai, because the amount of equities that are trading certainly aren't the full bunch of equities. XLE, we take a look at the, well, actually, let's go take a look at the CLU5. We'll take a look at the commodity first. The commodity itself, that's up 22 cents. We're at 49.41. And this baby broke yesterday with volume. This is what's so wild about this thing. The way that oil actually broke is saying that you're not just going to your 42 swing low. It's saying that it wants to go to 35, which would just be a total mind blower. That would be off the charts. We take a look at we go right from oil into the XLE. And what you're going to see with the XLE also can't get out of its way. You know, we put this XLE up, and what you're going to see is that you've broken out the bottoms of the 73 area, you know, and that's where it had some support. So that's saying that now it's set up that it can get down to 62. 62 brings you back to the October of 2011. So there's some serious business inside of this. What should hold is that the 2011 area, folks, is also the highs of the low of 08. You know, that doesn't hold. Man, oh man, I don't know what's going on with that oil market. It should hold, though, because that volume there is monster. It's 1.3 billion at that 63.43 area. And last month, we only came down at 243 million. So, you know, we'll see as we get down there. The XLF, we take a look at the financial. They're at the highs right now. Let's say BRK. Let's see where Berkshire Hathaway is. Berkshire Hathaway right now is running out at 142.96. And put this on. This is still the largest weighting structure. So it's off its highs of 152. You're at 142. It's going to have a 148. Yeah, this can get to 148. You know, this is going to be interesting watching this shake out, because, you know, it's not a bad-looking chart, really. It came off its highs, and that's probably because of how many railroad stocks they own. But let me go to UNP and see what UNP is looking at right now. Because in the transports, UNP, it's the rails that have gone south. Oh, man, look at doing another ABC down. Wow. Union Pacific down 320. Man, this is intense. So it's going to do an ABC down. So it's down $3.90, $3.29 at $94, off 125. You're breaking a B point, and it looks like it's going to have volume. You have volume on this B point. This would be, they put this on a weekly, probably a weekly ABC down too. Whoa, it is. So this would be, most conservative way I could do it would be going right there probably, 112 to 94. 18 bucks, get you $80. 80 bucks. 80 bucks is where it wants to go. Now, you know, when we talk about this October level, 2014, guess what? It's broken it. It's broken the lows of it. It's, you know, the highs of October 2014 was 106. The low was 96. This came off 124, and we're below those levels right now. That October 2014 level, folks, is a really dangerous level for the S&P. It's a long way down. It's a really long way down. Dow right now is down 21. You get the NASDAQ up 14. S&Ps are flat. Let's go take a look at the biotech index. Biotech's trading at up $1. The IBB at 395. Biogen, we take a look at Biogen. Biogen is up 226. Amgen is up 40 cents. Regeneron is up 194. Celgene is up 138. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 23. NASDAQ is up 13. S&Ps are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 22. The Nasdaq's up 16. S&Ps are flat. Some of the high-volume stocks in this market right now, we have Apple up $1.63. You have GM up 120. SanDisk up 973. We'll take a look at that. That's a dead cat bounce, but it's good dead cat bounce, no doubt. Qualcomm's down 250. GoPro is up $3. You get American Airlines up 173. We go over first. Let's take a look at SanDisk. SNDK. Let's see. Okay, so SanDisk gapped up $9 this morning. She's trading 63.89. You bring this baby back, what you're going to see is that this is an extraordinary mess. This stock has already got cut in half. It went from 109 down to 53. What you're doing is right now you're coming into, put this on a monthly basis, you're coming into the downdraft that had been created, the last downdraft, which is pretty dramatic. In April, it went from $87 to $63. 56 million shares traded. Just a huge amount of downdraft in an extraordinary way. No two ways about that. Now, let's go over and take a look at the bond market. This is what you have to wrap your head around the bond market. First thing, I look at the 30-year. So the challenge inside the markets have been for a huge amount of time. Not just, we're going on, what, 7, 8 years now that, folks have thought that, okay, interest rates have to go up, right? When you look at supply and demand, okay, well, first off, technically, bonds have continued to go up with volume, pull back with lighter volume. The 30-year ran to 166. Nice run, huge run. And technically, it did everything that, it would do. Wide price spread, accelerated volume, all of the above. Fundamentally, this is what you want to wrap your head around, okay? Because fundamentally, and I'm a technical person, but fundamentally, this is even easier to understand. And what it is the amount of funds, the amount of foundations, the amount of pensions, the amount of sovereign governments that have to buy so many bonds, and the amount of bonds that are in the marketplace. There's not a lot of bonds in the marketplace, folks. In fact, every year for the past 3.5 years, there's less U.S. bonds in the marketplace, and there'll continue to be less bonds in the U.S. marketplace. Why? Because we don't have to float as much money, because the tax revenues are coming in so dramatically. You have to wrap your head around that deal, because inside the prospectus, That dictates what people have to do. That's the first part. The second part is just as big, and the second part is that our rates are huge compared to the rest of the world. You know, our 10-year right now is 2.3. Well, Germany is 0.7%. What do you want to do? You go to Germany, you lend them the money at 10 years, and you get 0.75%. You lend the U.S. money for 10 years, you get 2.3%. Want to go to Italy? They'll give you 1.8. Spain will give you 1.9. Sweden will give you 0.7. Switzerland will give you, oh my God, Switzerland give you not even 0.3. Switzerland's going to give you 3/100ths. Now, you want to go to Greece? They'll give you 11%. That's what's running and dictating the bond market. What's going to be so intriguing here is the marketplace is saying our rates are not going up. The Fed continues to say, "Hey, listen, we're gonna do the rates." You know, and of course, if that's the case, that was the 10-year. That was the 10-year I just brought up. TYU USU 6. If we bring up the 30-year, well, I'll show you something. Watch. So the 30-year, right now we're at 3. So what you'll see is that if, in fact, they go up on the short-term rate, I don't think it's going to affect any of us as much as people do, because right now, no one can borrow money. We can't borrow money at 2.5%, right? So what's the difference? This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow's down 13. Nasdaq's up 20. S&Ps are up $1. Going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now, let's see where we're at. Dow is down 15, Nasdaq is up 19, S&P's are flat. Let's go over and we'll take a look at the composite for a second here. So inside the composite, we're up 19. This will be interesting to see. So the bottom, this will be pretty cool, actually. Okay, so what we have with the composite is this. When the composite gapped down yesterday, folks, it was 5196. We've hit 5192. I suspect that's going to try to get into that level. We go and we take a look at the QQQs. Now, the Qs can't make it. That's interesting. So, yeah, the Qs can't even make the high of yesterday, which was the 113.16. Made it to 113.03. Small caps. Excuse me, folks. We go into the small caps. We take a look at the small caps. The small caps are going to more than likely give us the most amount of information again. The small caps bottom line, came off the high, couldn't handle the high, and it was the first one to get back inside the lower range. The lower range when we're talking about in the small caps is 126.31. And, we'll see how long it stays inside that range. And as we come down, does it come down with volume? Right now, you are up 10 cents, and it's up 10 cents with dramatically lighter volume. And this is all this is doing right now on a 10-minute bar. It's coming into the downdraft from yesterday. Yesterday, that was 680,000, and you're coming into that level with 441. So that certainly isn't getting any traction inside that baby. Caterpillar. We go over to Caterpillar. We take a look at Caterpillar. Caterpillar came out with those numbers. This is a direct one-way hit. It's down 187. We take this. This will be wild if this is going to break a B point with volume. Man, it's a monster, too. 78.25. Let me bring this back a little bit further. Yeah, this got game. This is pretty intense. Wow. Okay, so A point on this is 107. The B is 78. So you got 29, which would get you a $60 Caterpillar. So here's the number. Thus far in a weekly, we've done 23 million, and you're coming into 25. You have 1 day left. We have plenty of hours left right now in the marketplace. Oh, look what's sticking out here. Look at this. Okay, I know where she's going. Boy, oh boy, yep. Okay, so Caterpillar of 2011, man, this is crazy. 67 bucks. You get a high volume swing low at $67, man. We'll see whether that can hold up at that point, but that's how this is shaking out. This has been a consolidation that long. And what you can get out of Caterpillar, folks, is this. Is that when you get back inside ranges, trading ranges, it's always dangerous. Meaning, this had stayed outside, it stayed in a higher range, from December of 2010. Now it breaks into the lower range. The lower range, it goes from a price point of $85 down to $27. That would be insane, but bottom line is that is a range that it does do. As one of our tigers just said, UA, wow. This is Under Armour. So let's see what the numbers come out. Under Armour, they definitely are making some money here. So their revenue is up 29%. Net revenue is $784 million. Imagine having a company that you get $1 billion company and your revenue is up 29%. Man, oh man, that's intense. No wonder why it's up so much. Okay, so earnings per share is 7 cents. The revenue estimate, the estimate was, they see the year estimate at $3.84 billion. They had seen 3.78, so that is moving up also. And if we turn around and we put this on a larger scale and see what we're looking at, wow, one-way track. Everyone is wearing Under Armour, evidently. Direct-to-consumer sales were up 33%, now represent 32% of all sales. That's pretty intense. So direct to consumer, man, no wonder why they can make so much money. Can you imagine that, all the, any retail outlet is, basically has, most of the time, has middlemen involved in it. Well, manufacturers, which, of course, Under Armour is a manufacturer. Now, what they're saying here is that almost a third of all their sales actually goes from manufacturing to retail. That's huge. Oh, my God. That's just printing money in an extraordinary way. No two ways about that. Let's go over and we take a look at Rheingold Resources. Rheingold flat out here today. I suspect, if gold's going to move, Rheingold's going to be one of the first ones that will move. Now, Rheingold certainly hasn't broken down. What you have with Rheingold is that you're trading out at $59.69. The price point that I absolutely want to see it hold this week is at $58. We're coming into the last swing low, and it's been consolidating. You can make an argument it's been consolidating. Well, the high was generated at 127, so that's 50% move, retracement. You're pulling back into the topside moves of 09 and, 09. That was May of 09 and September of 09. And you're doing it with dramatically lighter volume, but as I've said, quite a few times right now, we need buyers. The sellers have dried up, but guess what? Without buyers, you don't get higher price. Let's go take a look at Goldcorp. What Goldcorp had done, that continued to break to lower price. And this has to do with, high expense items. Right now at $12.97 for Goldcorp, that's so dangerous because it's under the high volume swing low from 2008. Huge problem. Newmont Mining, we take a look at Newmont. Newmont broke out its low here today, got to 1804. Right now at 1816. This will be a good one to watch because let's see if this can get any traction because it tested the low. ABX. Yeah, ABX right now is at 720. You know what is interesting, and I know this. There is one of the tigers was showing me this, wanted me to look at this, and this is pretty intriguing. Now I don't own this one, and I might start following it again. It's Nova Gold. This is what it did. So if we bring this back, now Nova, this is where this comes down to exploration versus production versus the amount of cash burn that is associated with production versus exploration. Because with an exploration, you can stop the expenses on with a heartbeat without losing anything, because you still own the dirt. And if we do look at this, bottom line is that you get a couple little signs of strength when this market's been a mess. So, Newmont does have, it's showing, and this is how you can see how an exploration play in a downdraft like this is better than a production play. Gold gets moving, production will move very quickly. Exploration will move, But you can see it when you can cut the expenses ASAP. That's a huge deal, folks. Let's go and we'll take a look at Apple and see if Apple can basically do anything, and it's doing zero. So check this out. Apple came down yesterday, 115 million. It's going to be really key today. What can it go up on? What you are going to have in Apple is that you very well, by the end of the year, we'll see what this shakes out. I was going to say you could have a doji, but you're not going to have a doji on Apple on a weekly basis. You could have a hammer, though. Well, you could have a hanging man. If this came all the way back to the price point of let's see, it would have to get up to 130. If it got up to 130, what it would have to do is, at that particular level, you'd have a hanging man that would be pretty intense up there. Some of the commodities out here, this is what we have happening inside the commodities. You have, let's see, gasoline's up 0.8%. You get a lot of them that are flat out here. I believe that we just had the gas numbers come out. Let's go see what natural gas numbers come out. This is UNG's down 8. We take a look at the CRB. Where's good old natural gas? Where is she? There she is. Okay, so that baby, this is probably delayed. 287. Okay, cool. Yeah, so that got to the top of its consolidation. We've done 36,000 contracts. You going? Oh, look at that. That's interesting. Yeah. So this was going into 73,000 contracts anyway. Yeah. Bottom line. Now what are you going to do? Now you're going to pull back probably into this 274 area. Where I'm going with the 274, that's where you had strength on the 9th of June. That's the bottom of that area, because the top of that area is the 289. That's where we are. So yeah, this is pretty cool. You get into the 289. What that sets up is 274. And of course, our man from Dave from Clearwater, I'm sure that he is all over that right now. Volume-wise out here, this is where we're right now. You get 195 million on the NYSE, and we have 496 on the NASDAQ. That NASDAQ, they're laying out some volume on the NASDAQ, folks. That's the bottom line. We're already at $500 million. So at $500 million on the NASDAQ, that is some big numbers. Oh, that's a beautiful thing. Our man Jay was trading inside that Nadex product. And that, you know what? And the natural gas, folks, there is no doubt that is the way. Defined risk in some of these highly volatile commodity markets are totally where it's at. There's no two ways about it. 877-927-6648. Freeport McMoran. Let's see what they have to be saying. Freeport McMoran's is down 42 cents, trading at $14.65. Let's take a look. She's breaking lows. Has juice says she's breaking lows. Put this on a monthly. Yeah, she's going. This is the so. Let's see, monthly basis. Your next stop is 1250, 1257. She breaks 1257, then that high volume swing low is game there at 740. Pretty amazing. And let's see, 456 million, 326. It doesn't look like it will break the swing with volume, meaning the swing that we're breaking right now, that on a weekly or monthly basis. But this is going after the highs of the lows of 2008. It's hard, it's hard to believe. It's hard to believe that it's 7 years later than the 08 downdraft. I mean, it absolutely is. Let's go take a look at the copper contract. What do we have? A copper? Copper right now is trading out at 240. It's down 2.5 pennies. Oh, look what this is doing. This will be interesting. So this kind of looks like gold. This is going into those lows there. It's going with lighter volume, but it wants to go test it. That spike low, copper has a spike low at 238. It wants to test it. Let me pull this HG on a continuous contract and see what we're looking at. So if we put it on a continuous contract, we go back 10 years. Oh, this is problematic. Yeah, copper's, I wouldn't be touching this, man, unless you're going short copper. Yeah, this is saying, you know, China will grow again, no doubt. But right now, you know, with a downdraft as dramatic as that country had inside the equity markets, that's going to make a difference. What I've found is this. When you have large downdrafts in equity markets, period, normally it takes a good year and a half, you know, just to have that impact hit. It hits pretty quick at the beginning. Then you get a lull, meaning that, you know, people think they're all right, but what ends up happening is about 9 months after that, the bills come due, meaning your regular expenses come due. You know, cash flow gets tight, and what that does is that puts a crimp on just about everything for a good year and a half, 2 years. You know, so I suspect that's where China is at this particular point. And needless to say, they're going to have more demand. It just depends on how much supply they actually had, when and how they were basically buying in all these commodities. The thing that's amazing, actually, is that when you look at all the building that was going on, we must have so much copper in the world, it's unbelievable. Because when you actually look at that basis, it's like, you got to be kidding me that you can keep supplying that many buildings on a continual basis. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Of course, we're going to have our man, Mr. Larry Pesavento, coming up next. Daryl Martin, Dave White, Steve Rhodes. You stay right there, folks. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 13. Nasdaq's up 19. S&P's a flat. You got a flat market out here. You know, folks, as you come over to our website at TFNN, right on the front page, you're going to see our man, Mr. Larry Pesavento. He is going to have a subscriber event. This subscriber event is going to be Monday, this coming Monday, 5:30 to 6:30 Eastern Standard Time. And what it's going to be about is going to be about the best trades that Larry sees setting up for the month of August. Now, as a subscriber event, you have to basically be in his newsletter. He has a great newsletter. It's Fibonacci 24/7. And what Larry does with this, folks, is that Larry's a pattern recognition expert. He is sending charts out 24 hours a day. Bottom line, what do you do with those? Well, it gives you a much larger understanding about what is going on inside the markets, whether that's the indices, commodities, or the larger indices, currencies. You can test drive his newsletter to get into the event. If it's the first time that you've done it, the first month on this test drive is only $48.50. If you like the letter, you'll be charged $97 a month after that. If you want your money back at the end of 30 days, no problem. You'll get the $48.50 back. So bottom line, you have no financial risk on this deal. You can come over to our website at TFNN. First, you sign up for the newsletter at $48.50. That gets you the newsletter for a full month, gets you into the event Monday night. And if you can't make it live, folks, we do have this archived on your site for an additional 30 days. So check it out on the front page of TFNN. And, of course, don't forget, no matter where you are in the world, you can get the whole audio of TFNN right on your cell phone, tfnn.mobi. If you want to get Tiger TV, just go to tfnn.com. You'll see that on the right-hand side, little devices. You hit that box. That will download the audio plus the video for you. And bottom line, 8 o'clock in the morning to 6 in the evening, all live programming. Then, of course, we replay that programming throughout the night. Market-wise out here, let's go take a look at the ETF structures pretty quickly. You have the SPY right now, 16 million shares, and let's see. So that's a flat market. See, the energy, there was a good amount of energy taken out of the marketplace yesterday, and not that the market moved a lot either, but because of how it moved. You know, you went topside, you pulled downtown. That was a good amount of energy. What you do have here is that between the SPYs, though, and the Qs, they going into the highs of yesterday with dramatically lighter volume. So bottom line is that's saying to me they're not going to make it once again. What the difference is that yesterday, which was so cool, you had that high volume spike. Now, we still have the high volume spike from 2 days ago from the open yesterday. That is going to get tested. The real key is that does that get tested today, tomorrow? We'll see how that baby shakes out. But I expect that kind of where we are right now, you're not going to be over those levels. So each and every time, whether you're trading equities, futures, the Nadex product, you could almost be selling this right here, putting stop right above it on the other side. And as it flips around the other side, of course, this is the type of market that you can be a bull and a bear simultaneously in the same day because the movement is not that huge, but the movement is plenty to make a good amount of bread because the low end of the E-minis is 04. The high end is up here at 11. That's a nice number. You stay right there, folks. I'm in. Mr. Basil Chapman's going to be coming up next. Steve Rhodes, Darryl Martin, Dave White, myself, Andy Heck. Dow right now, down 13. Nasdaq up 21. S&P's are flat. Have a great one. Have a safe one. Look forward to speaking it right here this afternoon. Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.